Hi, my name is Dave Dirks. I'm the Vice President of Marketing for Hudson Valley Credit Union. We're very happy today to present another in our B2B small business webinar series on a very hot topic these days about the payments and the world of payments. And we're very fortunate in this particular webinar to have somebody from WorldPay who is a part of FIS, which is a very large organization globally that does a lot of work in the world of payments. I'll leave it at that. Her name is Chrissy Wagner. She is head of global payments products and innovation with FIS. Prior to that, she was SVP of Priority Commercial Payments. And prior to that, she also was Senior Director for B2B Partnerships and Innovation at Visa, all companies that many of us are familiar with. And she brings many years of great insights and experiences to businesses in terms of payments. And she is particularly interested in small business, which happens to be one of our focuses here at Hudson Valley. So without further ado, I'm going to turn it over to Christina, who's going to lead you through this presentation on SMB payment trends. Christina?
Thanks, Dave. I appreciate your intro. That was a glowing intro. Hi, everyone. I go by Chrissy. If you call me Christina, I think I'm in trouble. So I go by Chrissy Wagner. You can find me on LinkedIn if you have any questions after the presentation about some of the topics we're going to talk about. But as Dave mentioned, I've been in the payments industry all of my career for about 19 years now at various different organizations, mostly in product and or business development, somewhat in corporate development, and have done a lot of work in my career with fintechs who support businesses of all sizes. But in particular, I've worked with lots of fintechs who provide services to small businesses. And what I mean by fintech is just a financial technology provider. We refer to it often as fintech, but as we get through the presentation, I think you'll see a little bit more about what I mean. Today, I am the head of product for our Omnichannel product division at FIS. And all that really means is I support businesses of all sizes with products and solutions that enable them to accept payments in any way their customer chooses to pay them. I will get into more about Omnichannel as we go through the trends in this presentation. But without further ado, I'm going to start us off with talking about some of the macro trends in payments. And I mean, no respectable presentation on payment trends wouldn't be complete without lots of facts and figures, but I'll try not to bore you with all of that. Let's get the party started. Earlier this year, FIS published its annual global payment study, and I pulled a few of the trends out that I thought would be meaningful and relevant for you all. The first one really talks about digital transformation. And in all honesty, we've been talking about digital transformation in payments and in financial services for many, many years, all of my career, really, since the early 2000s. But before the pandemic, digital engagement with our customers and thinking about how we accept payments across a broad spectrum of channels, it sounded great, but for many small businesses, it wasn't exactly an imperative to survive. Whereas, during the pandemic and post, as we hopefully reach the end of the pandemic, moving to digital transformation is a way to survive. We've seen this kind of cosmic shift happening, and we're going to talk more about what that means as we get into omnichannel, but essentially businesses now need to be able to accept payments online. They need to be able to sell goods and services, book appointments. All of those things need to be happening online for many businesses to survive. The second trend is really around cash usage. We've seen cash decline, not only in the US, but in many parts of the world. It really has exceeded, the decline of cash has exceeded our previous projections. FIS's previous studies projected a certain rate of decline over the years, but this has exceeded our expectations dramatically during the pandemic. Cash was used for roughly 20% of global point of sale transactions. So these are, again, payments happening at the point of consumer sale in 2020, but that's down rather from 32% of those same transactions just a year before. So what that means is we've seen over a 10% decline in just 1 year. And we expect to see that trend continue through 2024. And it's really about consumer preferences. And as consumers become less accustomed to having cash in their pocket, we're going to see more and more continued growth toward contactless payment methods. I personally hardly ever have cash. And when I do, it's like a surprise to me. I open my purse, I'm like, oh, I have money. So I think we'll continue to see that trend accelerate. And we actually are not expecting to see that bounce back after the pandemic. We actually expect to see cash continue to decline at additional 38% from now through 2024. I will make mention that outside of the US, there are some regions of the world that still heavily depend on cash, especially the Middle East and Africa, where they still rely on cash on delivery. We haven't had that here in the US in I don't remember how long it's been since we've had cash on delivery, but in some parts of the world, we're seeing that cash on delivery is still kind of holding strong, but we expect the leap to go from cash on delivery to mobile payments fairly quickly in those markets. The next trend I want to talk about is APMs, or the increased adoption of what we call alternative payment methods. You'll hear me switch back and forth. We often refer to these as APMs in our industry. APMs are leading worldwide and providing customers and consumers with a faster and a greater shopping experience. And while credit card growth remains flat, according to our study, we're expecting APMs such as e-wallets and mobile payments to double in size by the end of 2022. Mobile wallets have gained much of the share of cash's loss at the point of sale. So as cash is declining, mobile payments is increasing, and at a rate that's kind of wild, crazy, exceeding our expectations. The pandemic, again, has ushered in this wave, this higher interest in making contactless payments. So online checkout with a digital wallet has increased by almost 7%. That's average around the globe. And in the US alone, at the point of sale, mobile wallets grew a staggering 60%. What's interesting here is the US market, compared to other markets like in Europe and in other parts of the world, we were fairly slow to adopt mobile wallet payments or mobile payments at the point of sale. But over the last year, it's just grown astronomically. So small businesses will want to offer their customers flexibility and ease, and that includes alternative payment methods. And in addition to mobile wallets, there are other types of contactless payment methods like pay by links that you can make available over social media, or digital invoice presentment in which you can accept a payment right there through your inbox. Another category of trends that we're watching as it relates to small businesses has been the rise in point of sale financing and working capital solutions. They're slightly nuanced and different. Point of sale financing can largely be categorized as another APM or another alternative payment method. And we're going to talk more about that later in the presentation. But what this is if you've heard of or seen yourself solutions like Klarna or Affirm, when you're checking out online as a consumer, there are the types of solutions that allow you to break up that payment into fixed installment payments, let's say over a short period of time, let's say 4 months. We're seeing that many large merchants, large scale global merchants are already offering this, but it's starting to make its way down into the small business merchant portfolio of offerings that they can make available to their customers. Working capital is also hugely important for a small business, and we'll come back to this one as well. But with working capital, it's really about access to small business loans and capital that can help your business grow. And we're seeing newer models in recent years. We've seen newer models of lending for small businesses that kind of defy the traditional banking rules in terms of what the experience is like and the access to funds that a small business can have today. So we're seeing a wide adoption of those solutions in market. And last, we're going to talk about omnichannel because that's the world I live in. Omnichannel, we kind of loosely say the tipping point has arrived. It's not really fair to say this is new because omnichannel solutions have been around for quite some time. Many large merchants already do these types of things today, but and let me just define it for you quickly, but a true omnichannel solution is one that allows you to seamlessly engage with your customers and grow your sales anywhere and in any way your customer chooses to pay you. And while these solutions have been around for quite some time, they haven't always been that accessible and available to small businesses. We are seeing more providers make these things available. So your opportunities now are just phenomenal to adopt these types of solutions. But the use cases would be things like buying online and picking up in store. We call that BOPIS. That's a weird acronym, but we have lots of acronyms in the payments industry. But there are other variants of that, such as ordering online and picking up curbside, or ordering over the phone. Of course, there's the social media aspect, ordering online and then picking up in store or curbside. So lots of innovations that have been popularized really by the necessity that the pandemic has created, and will, we think, remain conveniences that consumers will want to continue to embrace. And we think that, I believe at least, that the way that these solutions come together for small businesses will really level the playing field for all of you as you look at potentially trying to compete with the big box stores in your markets. So definitely one to watch, and we'll talk more about omnichannel as we go through. So those were more of the big kind of macro trends from our payment study that I wanted you to be aware of. Now let's talk a little bit more about the changing trends and how we, at least in the payments industry, understand small business needs. Sorry about that. The core needs that we've identified are really, I've categorized them into two major buckets. They're the help me grow my business, which is really about helping a small business get that access to working capital, find new customers, promote, upsell, products, or even services to new customers, and really retaining customers. I categorize those as help me grow my business. And then there's the other category, which is help me manage my business, which is where most payments providers in past years have really focused. We're seeing these things kind of blend together. But with the help me manage my business, this is really about helping businesses with their system of record, like their accounting software, their payroll software, tax software, making daily operations and sales easy. Across multiple types of channels. And again, we've kind of talked about the multi-channel being online or face-to-face. In the payments world, we call that card present and card not present. And then also there's this idea of uncomplicated banking, just making banking products easy and accessible for small businesses. And I think that we see the way that the industry is trying to solve for some of these challenges, and at least the payments industry in particular and financial services industry, it's really looking at building ecosystems. So there are developing ecosystems in marketplaces that a lot of small business payment providers have developed to try and bridge the gap between helping a business grow and helping a business manage their operations. So this is not meant to overwhelm you, but I wanted to give you a representation of what I mean by a developing ecosystem. For many small business owners, there are just so many options to choose from, and knowing what's the right fit for your business may be a challenge. You may be using Google, or you may be talking to colleagues and friends and other entrepreneurs to try and figure out how do you get some of these needs met. So for example, if you just take working capital, if you're looking for a new loan, you might first check with your bank or your credit card issuer, or you might Google and look for a loan online. What we're seeing is that some providers are starting to make it easier to help you find the right solution by providing what we call a marketplace. So think of that as like, the App Store, the Apple App Store, or the Google Play Store, where you can go into this environment and pick and choose from the various, pre-integrated partnerships that particular payment provider has established. And then you can use those tools readily within that marketplace. Another trend to be on the lookout for within the fintech industry is embedding solutions that span the grow my business, which is what I have here on the screen under value add, or VAS products, another acronym. Value add services and products, those help me grow my business. But then there's this core operations, and we're seeing that some payment providers are starting to embed these solutions directly in the experience as you're using whatever that platform is that you're using. We're going to talk more about this concept of embedded finance because it's pretty important as you think about your own payment strategy and the types of partners that you work with to help you manage and grow your business. And at the end of the day, all of this ties back to the movement toward making it easier to help small businesses thrive. So let's talk about, before we get into the kind of key categories of products that I want to talk to you about, I wanted to, in a normal setting, if this was a live webinar, I would have polled all of you to say, first of all, do we have the needs right? Did we capture that right? Do we really understand the core SMB needs? And then I would have asked you, what are your needs? Since I couldn't do that, I instead polled my colleagues and my team and others in the industry in my network that work directly with small businesses day in and day out. And what they came back with, I summarized in this word cloud. But basically what they've said is, small businesses are resourceful, they're value conscious, they're adaptable and efficient. We actually noticed for ourselves in 2020, we saw a 50% increase in small businesses adopting our electronic invoicing solution and online payment method. And that was wild crazy because we had been in market with that solution for 3 years, but we saw a 50% jump in the adoption. And what that really showed us was small businesses can adapt and will adapt their operations in order to continue serving their customers and running their business efficiently. So highly adaptable. We've also heard, at least from my colleagues and those in the industry, that small business owners are more and more tech focused and they're aware of what's out there. So some of what I'm talking to you about today may not be new news for you. You're moving more online. You're looking at all-in-one solutions so that you can reduce the number of service providers that you have to help you run and grow your business. I actually talked with a small business owner and they basically said, listen, in some ways, you all don't give us enough credit. And he says that, I make these statements because I own a business and I've been in the payments industry. He said, small business owners are smart. They're well-versed in technology. They're modern and they're focused. And I thought that was really interesting. It was the first time that I kind of had this reality check of, just because I'm in payments doesn't mean I know everything. And there are many small businesses out there who may even obviously know way more about what they need than I do. So that was a good sanity check. We also heard that small businesses are social savvy. They know how to use Insta and Facebook to sell online. And that's really cool and exciting. I've actually bought some things online that way. So it's really cool to see that shift happening. But what we heard is they want an integrated and digital experience. They want to maximize revenue and they want to unify their customer experience. So that's what I've attempted to capture here, is to say they need ease. Small businesses need all-in-one solutions. They desire efficiency. And whether it's accepting payments, paying invoices, or moving funds quickly, they need access to capital and they need these streamlined operations. So I would love to hear from you all after this presentation to know if we captured that right. So what I've done is I've really said, okay, based on these macro trends that we've heard and seen through our own payment study, based off of what we think in our hypothesis around the small business need, their core needs, and what we've heard from colleagues and providers and small business owners in the industry. I've tried to kind of correlate all that into these 4 categories just to help us go a little bit deeper in terms of what we mean by omnichannel, APMs, working capital, and embedded finance. So we're going to go a little bit deeper and talk more about these key components. When we talk about omnichannel, just as a quick reminder, we're talking about a seamless solution that allows you to engage with your customers and grow sales anywhere and in any way your customer chooses. When we talk about APMs, alternative payment methods, they're really defined as, think of it as a way to pay for goods and services where these payments aren't made via cash or even not even made via the major credit card schemes. So they may not be using Visa, MasterCard, or American Express. In some cases, if it's a mobile payment, there may be an underlying card payment behind that payment method, but sometimes these are bank payments, bank transfer payments. Working capital is the ability to access loans, and in particular, the new models for accessing small business loans are really fast and efficient, and you can access them on short notice, and they support your cash flow. The last category is embedded finance, and this is a term that is often used for a non-financial company offering financial products and services to their customers while retaining control over the customer experience. That sounds kind of vague and ambiguous. When we get there, I'll talk to you a little bit more, but you'll start to see that theme throughout the next couple of slides as you start to look at who are some of the key providers in these areas and the way that they're embedding solutions directly in their offering, and allowing them to be discovered by the customer, the small business owner. So we'll talk more about that. It's pretty cool though. All right, first up is Omnichannel. I had to start with my favorite first. We've talked about the fact that this is about a seamless solution. When I think about the spectrum of Omnichannel, I think, of course, the ability for a business to sell anywhere in any context, having the software and tools needed to manage your business and improve your sales. We think about it as being simple and intuitive. We want omnichannel solutions for small businesses to be as simple as, you get a new iPhone and you're setting up your new iTunes account, right? It just needs to be very, very simple and easy to use. We also think about omnichannel as being a single in, single out type of solution. What we mean by that is that you can, as a small business, have one access point, one entry, one interface, if you will, or user interface that allows you to access your sales, your transaction activity, all of your operational data, reporting, analytics, and even the ability to market from that type of portal and be able to connect with your customers on a deeper level. We typically kind of baseline omnichannel requirements, and by we, I mean FIS, as we think about omnichannel, we typically baseline them by three primary kind of what I call core requirements for a payments layer. I'm not going to get overly technical here, but by the payments layer, I mean, this is the foundation of what makes an omnichannel solution. And I've already talked a little bit about this, but it's the ability to close sales and returns across channels. So this means you're able to close sales online, over the phone, and accept returns in store. And all of that is connected seamlessly for you. We've talked about being able to buy online and pick up in store or curbside. The other key component here is real-time transactions, the real-time view across your channels. So it starts to bleed a little bit into inventory management if you're a retail-based or goods-based business where you've sold something online and you might not be a big enough business that you've got warehoused inventory, but you might have warehouse in your back office there at your actual boutique or store, and you need to know what's been sold online in real time so that you can adjust inventory as needed in the store. The same may apply if you're a services-based business when you're talking about managing time and bookings and appointments. And then analytics across channels is really just another kind of baseline core requirement that's all about having that view of that data. We talked about that single interface and being able to see what's happening with your inventory, what's happening with revenue across all of your channels, and where are you seeing product lift? Are you seeing more product or more bookings online versus in store? And how does that change the way you manage your business? How does it change your office hours or your store hours, for example, as you start to see these trends across the channels in which you conduct trade or commerce or business? We then start to layer above that, right? If you think about the true omnichannel experience that I've talked about, we're starting to layer on value add services. So that's where you get the really kind of cool designed customer engagements where you have access to a digital storefront right there from the portal where you accept payments. All seamless, all-in-one solution. This is what we mean by an all-in-one solution. You've got your point of sale software. You've got the ability to send emails to your customers. You've got all the analytics you need. You can manage returns, exchanges, bookings, all within this one interface. That's really, when we think about omnichannel, where we're headed. We're going to talk about APMs next. So I mentioned to you before, these are alternative payment methods, and they're defined as a way of paying for goods or services that are not made via the major card schemes or cash. A lot of times, APMs use technology companies rather than banks. So remember, I said you're going to see that theme of non-financial service companies embedding financial services within their applications. Some of these APM providers are a classic example of that. I stated earlier as well that we expect APM usage or the adoption of APMs to double by 2022. I think a key reason for this, wild, crazy growth is that business owners are consumers too. I mean, the more comfortable we are at using Apple Pay to pay at Walgreens, the more comfortable we may be to accept those type of payments within our own business. Just last week, I was actually getting my hair done, and I was talking to my hairdresser. She was complaining. She knows I'm in the payments world, and she was complaining about her service provider and the poor customer support she was getting, and how her card reader doesn't always work, and it just creates issues for her. And I asked her, like, have you ever used Cash App or PayPal to send money? And she was like, yeah, of course, all the time. So then I asked her, had she considered using it to accept payments from her customers? And she wasn't sure if that would really work for her. She wasn't sure if it would be easy enough for her customers. So I walked her through it. We walked through it, and I paid her that day on Cash App. And she was like, holy cow, like, this is another way that she can market to her customers, hey, pay me via Cash App. And it's inexpensive for her to accept those payments, and it's easy for consumers to make those payments. So why not? So quickly, we'll walk through each one of these. Bank transfer is exactly what you probably think. It's the ability to send money from your bank account. These transactions typically don't run on what we call the typical card payment rails like Visa and MasterCard. They're usually running on a separate set of rails for what we call ACH payment or automatic clearinghouse payments. Mobile payments and e-wallets, I have these as two separate categories, but you could really collapse those two. There's only a very slight nuance between a mobile payment and an e-wallet. But if you look at the examples I have here with Samsung and Apple, Cash App and PayPal, they all kind of fit in that e-wallet kind of category. But you can make a mobile payment just, buying something online at, I don't know, Academy. You can make a mobile payment easily. And that trend is growing more and more as people are shopping from their smartphones. But the e-wallet is slightly different in that the e-wallet allows you to store a payment type like a card or a bank account and use that bank account or that card to make payments either on your phone in a mobile payment fashion or at the point of sale, where you can actually use your Apple Pay at the point of sale. So there's just a slight nuance between the two, but almost non-existent. I almost collapsed the two of those for purposes of this, but there is a slight nuance between the two because you can have a mobile payment that's not an e-wallet payment. So I hope that's clear, and if not, reach out to me afterwards. The next category that we've talked about already slightly is this buy now, pay later category. World according to Chrissy, this is like modern layaway, except you get to actually take the goods take the service at the time of payment. But what it does is it will actually split your payment out into usually short-term installment payments. So it might be 3 months, 4 months, 6 months, where you have the option, and usually there's no interest charged, but you have the option to make those payments over time. And typically, not always, but typically there's a card that's stored behind the scenes, that your card that's in your wallet, you kind of store it in the application, and it charges your card at specific intervals for a fixed amount. The benefit for businesses to offer this is what we've seen in our research is that there's typically a higher ticket sale when you enable these types of things. So consumers are willing to spend more when they think they have more time to pay it off, and they don't believe that they're paying any interest on that. One of the newest methods of payment is crypto, and cryptocurrency is a new and I would say just really kind of cool digital currency, digital technology that's still fairly new for many industries. It's really, really new in the payments industry in terms of merchants accepting payments through crypto. We've seen money movement or money funds transfer and the ability to buy cryptocurrencies, but it's really, really new for a merchant to be able to accept a crypto payment for goods and services. I am not the crypto expert, but I did a little bit of research just to give you some context. So we define the cryptocurrency as a digital currency that can be used to buy goods and services, but it uses this technology called blockchain. And blockchain is like an online ledger that allows really secure transactions. It's a decentralized technology that is a technology ledger spread across multiple computers. And so this allows those computers to each manage those records in a very secure way. So the appeal of this is security. Many supporters of this technology, the technology behind cryptocurrency, they like the blockchain because it's a decentralized processing system, and it's a recording system where, I mean, those transactions it's very difficult to refute or to charge back a transaction that has such tight record keeping around it. So it's really cool. We haven't seen very many merchants. I haven't seen very many merchants adopting yet, but we know it's coming. We know that there are small business providers, technology providers that are looking to enable this for merchants. So something to be aware of. If you'd like more information, I found NerdWallet, the website for NerdWallet, to be just incredibly helpful at just breaking this down a bit further. Two of these providers that I listed, Coinbase and Coin Payments, are well known in our space, but there are many, many others that are enabling and starting to enable crypto payments. So let's talk a little bit about working capital. Obviously, these are really tied to loans that enable small businesses to have access to capital. There are, I mentioned before, newer models to lending that are making working capital solutions a lot faster and a lot more simple for a small business owner to get access to. These newer models are simple. Usually, and this is not true of every one of these newer kind of lending models, but typically they're really, really quick in terms of application process. They usually only take a few minutes to apply. They don't really require tons of information. You don't have to necessarily have a full business plan or have lots of, financial documents. They're fast. The application process can happen in a few minutes, but the approval process and the underwriting process can also happen very quickly. Some of these providers can make a loan available in real time. If it's a smaller amount, if it's a larger amount, it might take 24 hours, maybe a little bit longer, depending on if you're really asking for quite a large loan. But in a lot of cases, the turnaround is very quick and the payouts are very quick. Most merchants can receive funds within 2 days, sometimes even faster if the provider is using what we call real time or push to debit card payments. Then a lender can essentially send your funds to your debit card. In the US, most institutions can support this in just a few seconds to a few minutes time. So instead of waiting a few days to have your ACH payment, your loan payment deposited to your bank account, you can have it pushed to your debit card. And many providers are enabling that today. They're also stress-free for the reasons we've already talked about, but repayment can also be stress-free. And again, this is not true of every one of these new kind of working capital models, but a lot of providers will enable your payback process to be tightly coupled with the revenues that your business is earning. So what enables them to do that is the fact that they can have access to data sources that are non-traditional data sources. Or by that, I mean, there might be data sources that a typical bank may not have access to, but we're going to talk about that when we get to embedded finance, of how the evolution of data access has enabled fintechs to create these types of experiences for merchants. So stress-free in the sense that a lot of these models will adapt the payment schedule to your incoming revenue. So if you're a seasonal based business, you can still access working capital, where in traditional forms, you might not have been able to be approved. And then because of these reasons, we know that small businesses love them. And we've seen in some of the ones that we've tracked, we've seen almost 80% renewal rates, businesses going back for more. Small business owners say, yes, I love it, give me more. And that's really interesting because that's not always true of traditional lending. So I said we would talk about embedded finance, and the reason I wanted to do so is because this is such a pivotal shift in terms of like how we think about payments as an industry, but also how you think about your payment strategy and the types of providers that you work with. And I'm going to talk a little bit about how it's evolved. So just to kind of tie back to what we said before, embedded finance is a term for a non-financial company who's offering financial products and services to their customer, but they're retaining control of the customer experience. So when I mentioned earlier about the ability to adjust payback on a loan based off of cash flow or incoming revenues or taking a percentage of incoming revenues, those are some of the experiences that a fintech can create on top of what would be a traditional lending product or traditional bank product. Embedded finance is reshaping the distribution model for financial services, and it creates a new role for technology companies. I talked a little bit about the access to data. There's this new way of accessing data, and on the slide here, we talk about open banking because open banking has really paved the way for this new way to access data. I'll give you a really good example of this. If any of you have ever seen Cabbage. Cabbage was recently acquired by American Express, but Cabbage had a really cool way that you could apply for a loan there. As part of the application process, you would grant Cabbage permission to access your bank account. Like you could tie certain accounts to your profile at Cabbage. Another company that does this well, or did at least, was Mint. So Mint was another way. They use some of these technologies offered by like Plaid and TrueLayer and others where you could, when you created your profile on Mint, you attached the different bank accounts that you wanted associated with your profile so they could go and grab that information with your permission. They would grab that information back and create an experience for you to either manage your budget, as is the case of Mint, or in the case of Cabbage, so that it could create a better picture of who you are as a business so that they could more appropriately approve your loan amount and the financing that you're asking for, the capital you're asking for. The next kind of evolution of this is really what we call as banking as a service, BaaS, which is another acronym. We have, again, tons of acronyms in the payment space, but as we see that banking as a service taking hold, now you're seeing in this model, you're seeing non-financial institutions or fintech partners who aren't banks, who are selling bank products or white labeling. What we call white label just means that it might be sold to you as a QuickBooks product, for example, just using that as an example. It might be a QuickBooks prepaid card that is sold to you, but it's actually a bank product that sits behind that. They're working with the bank, they've white labeled it, and in the fine print, you can see that it's a bank product that's been offered to you. This banking as a service is, again, intended to make it really easy to distribute financial service products to businesses and consumers of all types. And then as you start to continue down this continuum, for lack of a better phrase, we start thinking about embedded finance, which is just yet another incremental evolution of that model where now it's not just access to the data, and it's not just a reselling of a bank product or white labeling, a branding exercise of a bank product. It's really embedded in the solution. So you can, for example, log into your Square account, using Square as just an example, and apply for a loan. You now can have access to integrated payments. We talked about that when we talked about omnichannel. And integrated payments is just another fancy way of saying, payments embedded within an application that you're using to create that all-in-one solution. So embedded finance is really enabling more and more of that across our industry and across all the value, the ecosystem that we looked at earlier today, that continuum of value add service products all the way through operational capabilities. We're seeing more and more of those types of providers partnering with banks and leveraging the technology stack that exists in the banking infrastructure. And the truth is we need our bank partners. Banks keep us all honest, and they manage all the regulatory stuff, and we trust them. We trust our bank partners. We also trust our fintech partners to create delightful experiences for us. And so the coupling of financial services and banking with fintech, that marriage is really a marriage made in heaven for a small business owner, because you can get access to an easy to use solution with easy access, but know that underneath that, there's a banking relationship there that's strong, and that your money is safe, and you can trust that transaction is going to be secure. So a few examples of this, I have a few of the icons down at the bottom, but if we think about point of sale or e-commerce providers, I just mentioned before, they're offering integrated payments and lending services, but it's actually moving more and more into even the consumer space, where if you look at Apple, for example, making credit and debit cards available, lending services available. If you look at Facebook enabling what we call P2P payments, which are just peer-to-peer payments, the ability for me to send money to you and you to send money to me. We saw some of that even when we talked about APMs, where you've got Zelle and you've got Venmo, for example. Venmo, you can make a payment to a business using Venmo as well as Cash App. So we're seeing more and more of these peer-to-peer payment services being offered by non-traditional partners. Like, we think of Apple as a great device manufacturer, a very sophisticated computing company, but they're moving into payments by partnering with financial institutions to enable these types of use cases. And so I think we'll continue to see more and more of that. And I think it'll be great for all of us, and great for you all who are, looking to both grow and manage your business. So that's the whole concept of embedded finance. There's a lot more that we could talk about there. There's some resources online if you're just interested to learn more about this. But to me, I think this is one of the most important concepts in all of payments in my mind, because we will see, I think, the idea of accepting payments kind of just is expected and kind of just goes away. It becomes a commodity. It's like, no, what you're really after is creating a delightful experience, whether it's you wanting to create that experience for your customers, or whether it's you as a customer of one of these providers. You want just an easy to use experience. And so it becomes less about the payment and more about the experience. So keep your eyes on that, y'all, because I think that's going to continue to grow. Okay, so I'd like to close this out with the so what. What does all of this mean for you? What does it matter to you? What should you think about? If you're considering your own payment strategy, what are some of the things that you should consider? And I always like to start with features, but even before we start thinking about features and functionality, it's really, you've got to take some time to think about what type of experience you want to create for your customer. What types of ways do you want to be paid? What types of ways are your customers asking to pay you? As you kind of take stock of that, then you're going to want to look for a payment provider that can provide rich and robust features. You want a solution that will bring something unique to your business without imposing tons of extra fees and charges. You also want to ensure that the functionality, that it's a stable platform, that it's easy to navigate, easy to use. It's functional and intuitive for you as a business owner and for your staff if you have one. I think configurable and scalable kind of go hand in hand with features and functionality, because you obviously want to be able to have a platform that can grow with you. That's what I mean by scalable. You may be a micro merchant today, and you want to be able to grow your business to have multiple locations, or to have a really strong online or a global presence one day. Or you may already be a mid-sized business that has lots of locations, and you intend to grow to become a more enterprise-sized organization. You want a payments provider that's going to be able to scale with you, as you grow your business. But then you also want to look for configurability. That's a tough word to say. You want to look for ways that you can create kind of the niche that you need for your business. If you're in the food and beverage space, you want to start looking for things like pay at table. If you're in the retail space, you might want to look for, that ability to the accepting of returns from online orders, right? You want your customers to be able to walk into your your boutique and be able to make that return very seamlessly. So there are different components that you want to look for depending on what industry you're in. If you're a services-based industry, time is money for you, and you need to be able to track appointment bookings and advertise when maybe you've had a cancellation. So those types of capabilities are what I mean by configurable. It's really about what vertical you're in and what industry you're in. Vertical is a very inside payments word, but what industry are you in, and how do you need your provider to be able to support your specific nuanced needs? Now, of course, security is a key one. It probably should have been first, but your customers won't be using your new payment solutions very often if they're not secure. So you want to ensure that your processing partner provides you with secure features like fraud protection, end-to-end encryption, all of those types of capabilities that will keep both your customers' data and your data safe. And then we, of course, want, reasonable and transparent pricing. If you're not getting transparent pricing from your payment provider, you should be asking some really tough questions, because pricing should be in an easy to understand format. You should understand what you're actually being charged for. And if you're thinking about APMs, you really want to carefully review the fine print there and make sure that you're not being overcharged for those capabilities. We think about flexibility a lot. Alternative payment methods, by their definition, are flexible. They offer flexible alternatives to the traditional payment method. So, by nature of exploring APMs, you're going to start to invite more flexibility in the way that your customers pay you. So I think really a key thing there is just be open to some of these alternative payment methods, especially the low cost or no cost options, because you could really create some stickiness and loyalty with your customers if they can pay you in a way that is very easy and comfortable for them. And lastly, of course, you want to talk to your provider or make sure that you're getting the appropriate customer support from your provider, because, if we actually heard in the poll that we did that a lot of businesses are aiming for online support, like chat support and things like that. But we also, when something's wrong, we want to be able to pick up the phone and call somebody. If my payment terminal is not working and I got a customer standing in front of me, you want to know that your provider is going to give you that white glove service when you're in a pickle like that. So not every provider can. So you definitely want to explore what is the customer service model and how will they support you in a crisis. That's really what it boils down to, because your day-to-day needs, you might be able to meet with online chat and online help resources, but when you're in a pickle, you want to know that you can get access to someone who can help you. So those are some of the things that, I would leave with you to think about as you're exploring your payment strategy. That's all that I have for you today. I hope you guys have enjoyed this. I had a ton of fun putting this together. And again, as Dave mentioned before, I really enjoy working with small businesses. And so really, really pleased to do this. I'll turn it over to you, Dave. And you guys hit me up on LinkedIn if you've got any questions, or if I can help you with anything. Thanks so much.
Well, I have to tell you, Chrissy Wagner from WorldPay, what a splendid job giving a great overview of what's happening in payments today for small businesses. I learned a lot myself. I took copious notes. I just want you to know that. And I'm sure our business members are going to get a lot of value out of what you said. So great insights, and we really appreciate your time sharing it with us today.
Thanks, Dave.
I do have a question though. I have some follow-ups here just on my own, actually. I have some friends that own small businesses. I have one in particular. He has a very well-established sort of grocery store / deli. Mm-hmm. Early version, not a convenience store per se. This is one of those old line stores, been there in the family forever, done really well. And he's like the third generation to run it. And he does not take payments. Just says on it, when you walk in, it says cash only. And of course, what he did is he established an ATM machine. So he makes quite a bit of profits collecting $2 every time I go in there, because I forgot to get some cash out from my credit union. From Hudson Valley, I go there, I got to pay him $2. So I've been working with him for a long time, trying to say, hey, I think you're missing out on an opportunity to get a greater larger share of purchase here because people with cash are going to limit sometimes their purchases based on the data I've seen. There are these holdouts out there still today that still don't want to accept payments at all. I've talked to him about it. His big concern is he's got to give up a percentage of the transaction fee because, you know, it's a margin business. I don't want to put you on the spot, but I mean, can you help me help him?
You know, here's the thing, and I work obviously for WorldPay from FIS, so you know this could be treachery here. But one of the ways I would recommend to try to get him comfortable with the idea of digital payments is really starting with something that is very low cost or that's not margin based, right? I mentioned to you about my hairdresser, or in the webinar about my hairdresser. She actually takes credit cards, but because she has a janky setup, I won't say who she's using,
Right.
but because she has a janky setup, it's just a pain in the rear anytime somebody wants to pay with card. And so when I started talking to her about Cash App, it's like, oh, it's a bank to bank payment. So it's practically free. I don't even think there's any charge at all for her to accept that.
Okay.
And it allows me not to have to worry about carrying a checkbook around. I don't even remember how to write checks. Like, and when I have to write a check, I have to go online and be like, what was I supposed to put in that
Right.
section? But it allows me to pay her without having to, you know, carry a checkbook or having to remember to get cash out. Starting with something that might be a fairly easy step to say, okay, well, what about Cash App? Because what I encouraged her to do was to set up, she can put her QR code to receive payment right there on her mirror with a few instructions, right? It's not going to be for everyone, but for those who are used to using Cash App to send money to friends, that is so easy and such an easy way to get him started. And once he starts to see the customer adoption and folks, maybe over time, he'll start to see his tickets increase, because if I only have 10 bucks in my pocket and my option is to pay $2 to go to the ATM, then guess what? I'm only spending 10 bucks in your store.
Right.
But if I can pay you with my Cash App, I might have $100 I could actually spend via Cash App. So, you know, I think that could be one way, Dave. We'd love to say, hey, you should be taking credit cards, but that's not always practical for every small business. So maybe even PayPal would be a way to start with accepting bank-to-bank payments. And maybe he'll see, oh, I actually make more money this way. Maybe I can start to dip my toe into going into other payment options like cards.
Right. Right. Yeah. And that's been my pitch to him, that, you know, although there's a transaction fee, you got to pay for the service, which is, I think, is a reasonable value for a merchant. If you're able to grow the size of the basket purchase, you know, like, as you said, you know, if you go in and get a $20 bill and then you're limited to that $20, and the studies I've seen over the years have basically said people are freer and feel more open to do more purchasing, going in for one thing, coming out with, like I do when I go grocery shopping, I go in with 5 things on my list, but I come out with 20, right? Because I'm doing my electronic payment. I know the money's there. I can spend a little bit more than maybe the budget in my head. So great answer for that. Start small and work that. And of course, I want our members, business members and prospective business members. We have over 7,000 active business members in the Hudson Valley. If you have any questions about payments, we're going to be posting this, first of all, on our YouTube channel within the next couple of days. So this you'll see on our YouTube channel. We're going to give you an opportunity on that channel to have any questions on YouTube. You can relay them to us, and if we can answer them, we'll be happy to ask and see if Christina might be able to help us as well. So we're here at Hudson Valley. Reason why we do these seminars and we bring great people and inside experts like Christina Wagner from WorldPay here is because we are definitely committed as a regional financial services organization to helping our businesses in our local economies grow. And so when we can do something like this on behalf of our members, and even those of you who don't bank with us now, we feel it's part of our way of giving back. So we hope that you've gotten something out of this webinar. I know we did. And again, Christina, thank you so much for sharing your time today and your insights with us.
Thank you, Dave. Thanks, everyone.